All right, good day, traders. Welcome back to the live room. Happy Thursday to you. Hope all is well. Been a pretty active week in the market, a good trading week. Darren even popped on to the chat the other day and shared with us shared with us a nice cipher opportunity that he took, and of course, hours later, made a massive amount of profit off of it, and wasn't shy about letting us know as well. So good to see even he's having a good week. As you guys know, this is the first week of the month, which means it is Non-Farms Friday. We currently have ECB minutes coming out as well. Here's a look at the economic calendar. You can see ECB monetary policy minutes coming out. We've got jobless claims, normal kind of Thursday stuff here at 8:30 for the dollar. Some Fed speakers later today, and then of course tomorrow is the non-farm payroll, which is kind of the biggest news event of the week, where the market is going to be looking to see how high the jobs number is going in anticipation of will the Fed kind of pivot on its monetary policy. What I mean is that they've kind of outlined, here's what we're going to do over the next two kind of rate hiking periods. The market's kind of looking for not the opposite, but looking for reasons to be in the opposite direction, right? We kind of already know what the path is laid out. So now the question is anything going to come into the market that may cause them to kind of change? And if so, how can I identify that as fast as possible? And how can I be on the other side of the market before things take off? So typically what we see on days like this are a little bit of dull days, right? Nobody really wants to kind of do anything before a big news event comes out. By the way, the Euro trade from yesterday, if you guys weren't on the chat later, did play off pretty well. We were pretty proud about our target locations. For target ones, we came right to that level before reversing. So we always talk about taking pride in things when it comes to your trading. You can take pride in wins just for winning. You can take pride in losses if you made the right prediction and maybe were a little bit off or got skunked out. I take a lot of pride and try to be as pinpoint as possible in my target location, right? I'm pretty conservative with targets, but when I see stuff like this and the market kind of gets to that level and respects it, believe it or not, it actually makes me a little bit more happier than if the market were just to slam through. Because at least in this instance, it tells me that, hey, I was dead on and where I thought price was going to go to. If it slams through, it's like, could I have gotten a little bit more out of the primary targets and whatnot? So a little bit happy to see this bounce, of course. I've got the second half of my position still trailing on for big moves. I hope we don't retrace too much because I don't want to get stopped out for break even. But again, typically the day before kind of big news events, the markets kind of slow down. They kind of don't do much. So we got a rather slow day in the market. So maybe a short session today. But we're going to come in. We're going to do our business. We're going to talk about what we need to talk about. And today we're going to go back to the dollar Canada for the trade of the day. Now, dollar Canada was a trade that I got in earlier in this week right here, and it took me out right down there. And we revisited this yesterday and we talked about, okay, well, the original trade was based off of kind of a channel trade. It wasn't a grade A trading opportunity, but it was a solid one, right? It was worth taking. And we violated that channel to the downside, very similar to the Canada yen trade we looked at. Well, now the next thing you're looking at here is, right, a pullback and an opportunity to get short on this next pullback. Well, we didn't get the opportunity, or I should say I didn't get the opportunity at a level that made sense for me, right? We did end up getting a lower low, lower close right here, but that's not going to give me the risk reward that I require to be in a trade. And I thought this was a cool example because this is going to show the difference between time frames and how you can look at two different time frames and have two different perspectives in the market. And it'll be a good example of why we need to be consistent with how we look at the charts and why we need to have a routine. So if you understand our principles on violations and confirmations of structure, we have a violation to the downside. Would you guys agree? Price spikes lower. Do we have a violation a lower low, lower close to the downside? Give me a yes or no. The answer is going to be yes, right? We then retrace back up. Do we have a violation to the upside? Do we violate this level right here? Yay or nay? Once we retrace. We do not violate that level. Nope. Right? Have we broken and closed above this high? We have not broken and closed above this high, so we do not have a violation. So we have a hold, right? So this is a positive sign for a positive sign for your bearish pullback trade, right? Remember, by violation, we mean a break above, close above, higher high, higher close when we use the term violation, right? So on this 4-hour time frame, you're looking at this and you say, hey, we got a nice test, right? Nice rejection right here. We know that this is a nice bearish signal and we have a hold. Now we go one more time frame to the hourly, and I ask you guys the same question. What do we have here on the hourly? Do we have a violation of this level on the hourly time frame? Tony says he's out of his beast short. He's going to sit quiet for a little bit as the ECB stuff goes on, right? On the hourly, we do have a violation of this level. So now the question is, well, what do I do? Do we have a violation or don't we have a violation? I looked at one time frame and we clearly held, which gives me a bearish bias. But I go down to another time frame and we have a clear violation, which gives me a bullish bias. Which one do I follow? And that's a question that gets a lot of traders in trouble. And this is why it's important to have that routine, right? Not just a routine in your trading of how you go about your analysis, how do you journal, how do you, keep track of everything, but you need a routine for, hey, what time frames do I check? What do I use those time frames for? And that should be consistent, meaning that you shouldn't come into the market on Monday and then use the weekly as your higher time frame and then drop down to the daily to trade. And then on Tuesday, come in and use the 4 hours, your higher time frame, and drop to the hourly to trade. And then on Wednesday, go back to the daily as your higher time frame and then trade on the 15th, right? There needs to be consistency in what you're doing. Again, consistent analysis plus consistent execution equals consistent results. So you should have a consistent, this is my higher time frame. I know exactly what I use my higher time frame for. This is my lower time frame. I know exactly what I use my lower time frame for, my trading time frame for. And that's going to eliminate the confusion, or at least most of the confusion, right? That's the point of a trading plan, to eliminate that confusion. Real quick, the YouTube says, for me, the higher time frame holds principles. Yeah, the higher time frame, in my opinion, should always trump a lower time frame, right? In my opinion, the higher the duration, the more important that time frame is, which means the daily, again, my opinion, the opinion of most, but there's no say all and be all in trading, but the daily is going to be more powerful than the 4 hour, 4 hour more powerful than the hourly, and so forth. So that's a key way to kind of eliminating kind of some of that confusion in the market, is know what you're using the market for. Now, to answer another question we talked about yesterday too, right? We're going to stick here on the hourly time frame. What we have here in the hourly is a head and shoulders pattern, not a completed head and shoulders pattern, but a head and shoulders pattern, right? Price action moves down. We have our left shoulder. We retrace, giving us the first opportunity to start a neckline. We come down, create lower lows. This is going to be our head. We come back up, right? We create the right point of our neckline, right? This is not going to be kind of this is going to be a trend line, an upsloping type of head and shoulders. We come down, we put in a symmetrical right shoulder, meaning it's the same distance as the left shoulder, if you can look. And then we're coming back up to potentially confirm a head and shoulders. Now, yesterday we spoke about trend lines a little bit. I'm not, if you guys missed it, I'm not a fan of trend lines. I don't use them personally. I have nothing against them. It's all, but if you're going to use them the right way. But we had a conversation. There was a question about, hey, do you connect trend lines from the closes or the extremes? And this would be a good example of a trend line if you're trading this as a head and shoulders, because there's two ways to draw this neckline. One way would be from connecting the left neck to the right neck. Again, I like to use extremes if I'm connecting the dots. I don't really see the point in using the closes and ignoring the extremes. They play a role. But for me personally, when it comes to head and shoulders and really support and resistance or trend lines in general, I like using horizontal support and resistance. So you've got a head and shoulders that looks two different ways right here, where you have two different violation points or completion points. For the horizontal head and shoulders, right, the yellow line, a violation of this level is what would confirm the head and shoulders. For the upward sloping head and shoulders, which is not my favorite type at all, right, a violation of this purple line would give the confirmation of the head and shoulders. And again, the head and shoulders is a classic reversal pattern. Essentially, if we complete this head and shoulders, we go back to the analysis that we had on Tuesday, where we're looking for a move back up to retest to high. So we kind of got out of an initial bearish position, played around a little bit, didn't really get a follow through to the downside yet. And we're looking at being in a position where we may come right back to that initial reason for entry. So decent opportunity here on Canada. Again, not a lot in the markets today, but this is one that you can keep your eye on. Real quick, got some questions over on YouTube. It's going to be a short live stream. By the way, if you guys are watching on the live stream, if you're not subscribed, subscribe, please. That way you don't miss these things. If you are subscribed, hit the like button. Real quick, Keel just stopping by as I'm currently back testing. I got some back testing planned today as well. Hopefully, if I don't get caught up doing some other stuff. I've been going through a lot of kind of old content and repurposing it, finding some old gems of the rare times that I say smart stuff. And I'm like, I gotta save this so my kids think I'm smart one day. As I've been going through that stuff. But taking a break from back testing, I've done more than 1,000 trades in different strategies, which have all failed. Been there, brother. Been there. And I'm still testing. Something you said told me on Instagram. Think about it like this. I won't get on too much of a rant about this, but a lot of people will, Jason and I talked about this yesterday. We did a Trader Coffee Break episode where we talked about journaling. And, about the main thing keeping people from success, they're just not willing to do what's the work, right? The main thing stopping people from being successful is just they're not willing to do the work, right? People think success takes like genetic lottery, being born into the right family and having all the luck go your way at the same time. And luck does play a role. I also believe that you can create your own luck by putting yourself in the position to take advantages of opportunities when they arrive. That's my opinion on luck, to be honest with you. But the truth is, most people don't become successful because they're just not willing to work. It takes effort. And they're like, effort's not worth it. And the thing about testing is many people hear like 1,000 trades and you automatically give up, right? You're like, why would anyone test 1,000 trades just to fail? Why would anyone test multiple thousands of trades just to fail? And the thing is, even if it fails, it's still a learning opportunity. So the knowledge and experience that you get from those thousands of back tests, they just don't go away, right? Some of it does, but your brain stores the important stuff and you're gathering little bits that are going to be very helpful in the future. And what it does is it makes future back testing, future strategy development that much easier because now you have an idea. Maybe a full strategy didn't work, but I think we can all agree that usually pieces of a strategy work where it's like, oh, man, that's a really good entry reason. I couldn't find a exit or couldn't make the stop loss work. But that entry reason, right? You can store that in your brain, right? Your data center for later. And the next time you're developing a strategy, you're like, okay, man, I got the entries, I got the exits, I got the stops and the targets. I just don't know how to get involved in the trade. Boom, now you can go pull on that previous experience and be like, well, I remember this reason for entry I used back a long time ago that worked, and plug that in. So it is always worthwhile. So keep at it. I like failures. Failures provide opportunities to learn, right? Just ask Thomas Edison. I guess you can't ask Thomas Edison, but just look at Thomas Edison. Real quick, OG Bruns says, hey, Akil, how are you? I'm doing good. It's a Thursday. Thursdays are like my Fridays, so doing fine. Doing what I love for a living. Any tips for a beginner trader in building a trading plan? Yes, start with the strategy. and I'm not sure if you're talking about anything specific in a trading plan, but if you're talking about a trading plan in general, which kind of encompasses a lot of parts where it's like psychology, philosophy, rules of engagement, money management, routine, all that stuff. I would say start with the trading strategy, right? The trading strategy, the rules of engagement, that's going to be the most important part of your plan. Once you have the trading strategy and the rules of engagement down, then it's going to be a lot easier to kind of start building out your routine. You won't know your money management strategy and your risk strategy until you have that strategy built out and back test it, because you won't be able to play around with stuff until it's there. So start with the core piece. Core piece is the main thing that you need to kind of identify, and then you can build all the other stuff around it. All right, all the other stuff is still important, but you can build all that other stuff around it. I got one more YouTube question real quick. John's looking at 1 hour cipher Aussie dollar. This bad boy right here. Sorry about that. Let me get this in real quick, John, before I get to the last YouTube question. Sorry about that. Ooh. Ah. Double check that, John. We did not hit a 3D2. If this is the one you're looking at. I thought New Zealand had something. Nope, wrong one. Double check the B leg on there. Real quick, stuck with me for all the trading journey. Focus on. All right. I work and I've been trying to swing trade, still trying to find the best time frame, my trades and indicators and how to do things. By the way, great content you share. Thank you. Yeah, always work your trading around your routine first. So I always talk about mapping out your day. Seeing where the gaps are, seeing when you have the ability to look and be active on the charts, and then you'll be able to find out what type of trader you can be. Whether you can have a few hours day trading, whether you have to be a swing trader and just watch the charts every 4 or 8 hours, or whether you maybe take a daily route where it's like, hey, I'm going to look at a daily chart and just look at one candle a day, either in the morning or the night, and adapt it around there. And that's the cool thing about trading, is that in trading, it's especially in Forex trading where it's 24 hours, there are endless opportunities. You can literally mold it and create it to work around whatever you want to work around, which is pretty cool. So again, short session here on YouTube and TradingView. I'm going to kick you guys out. I'll see you guys this weekend for a Trading Edge video. Maybe not. I got a busy weekend. I may not have time to do it, but I'll try my best if I can. If not, I'll see you guys Tuesday. Live rumors. I'm gonna load up my NinjaTrader chart, and we continue to look around the market. Let me shut the live stream down.